Now, what we've seen the massive uptake in, as mentioned in the introduction here, is the corporate compromises. Many small to medium enterprises facing loss of sales or a complete halt in business over the last 2 years have seriously been considering the option of liquidation against maintaining a going concern. And what must be noted here is in the event of liquidation, there's two options. There is a forced liquidation, whereby a creditor can force the entity to liquidate, which we have seen SARS do on the very rare occasion. Then there is the voluntary liquidation, which is all good and well because your creditor will get 10, maybe 20 cents to the rand. But that being said, that leaves the owner of the business with absolutely nothing and also no business to maintain in order to generate further revenue. In this regard, my advice in these instances is always to maintain the going concern and engage SARS legally to actually reduce the liability to something that is affordable and that the company can settle. Because it's very important to note that, especially with smaller entities, sole proprietorships, and this will be canvassed a little bit in a little bit more detail with regards to the micro tax status, but just with the sole prop and even with partnerships, what we have seen is notices going out from SARS in terms of Section 181, which is personal liability of directors. And the danger that a taxpayer would run in looking at possibly the liquidation or an alternative avenue is, should SARS be unsatisfied at the end of all of this drama with the liquidation proceedings, etc., or even in the interim, they are at liberty to go after the director's personal assets, any assets held in their personal capacity. And what we've also seen is, with regards to certain smaller entities where they are in financial distress already, should there be a member loan or a shareholder loan, director's loan, SARS then looks into the director further, into the director's compliance. They ask for the respective loan accounts, and it can become quite messy because, to an extent, the corporate veil is being pierced. And this is something that I very much recall from my campus days, where it was discussed that you cannot pierce the corporate veil. However, what seems to happen is it may just be slightly lifted in this instance.